Welcome back everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ, where it's been a strong day for the bulls overall, although we are a little off the day's high, but we continue to see green all across the board. You look at the Nifty, look at the mid and small cap segment, everywhere there is just greenery at this point of time. The Nifty and Sensex are set to close on a positive note for the third successive session. Santo, clearly this comeback has, at least got some legs at this point of time. But it's the small and mid caps which are charting a new story at this point of time. They are the one who are outperforming their large cap peers, and clearly almost 2% gains for both the small and mid cap index in today's session. So clearly there is some buying power coming back, probably maybe driven by retail investors. We don't know yet. We have to see about that. Apart from that, if you look at the sectoral indices on NSE, they too have seen all green all across. I mean, from realty to banks to IT, almost every sector trading in the green today. So clearly, Santo, I mean, it's been a great day for the bulls.
Yes, no doubt about that, CJ. But I seriously doubt if it's really retail investors that are powering this.
Oh, why
rally.
not?
That's not the sense
I am pretty sure it's not the foreign investors.
Definitely not the foreign investors. But what most likely you could be seeing is relentless short covering, which probably again could take the market, some more higher. In fact, when there is still pessimism, among most players, that's when markets tend to, climb higher. That's what we are seeing exactly right now. But I don't think there is any serious buying happening right now. But that said, you shouldn't be looking a gift horse in the mouth.
I mean, come on, we have already seen what a 700 points upswing in the market from the lows that we hit not so long ago. But yes, I think there had to be some. I mean, all of it cannot be short covering, can it?
A large part of it, but I would still say that this is a good time to be, selectively booking profits, because there are plenty of stocks, especially among the mid caps and small caps, where I think we are seeing nothing more than a dead cat bounce. So this is a good time to be getting rid of some of those iffy stories in your portfolio.
Or maybe going whole hog on some of the great stories in your portfolio.
No, but see, this is what we have been seeing consistently since March this year. The markets crash, then they rebound, then they start sliding again a rebound, a whiff of bad news, and they start going all over again. So I think we should wait for one more cycle before we can say that the market has safely turned around.
That said, Santo, clearly, even if the index, there are doubts about index, there are certain individual stocks where there is still some conviction coming out. I know one stock that you are going to talk about is
Maruti. So sentiment for the auto sector in general seems to be on the mend now, and cooling commodity prices to a large extent has contributed to that. Again, in the case of Maruti, analysts are pretty bullish. The company is lined up some launches. It's a mix of fresh launches as well as upgrade of some of the existing platforms. So now about half a dozen launches plus refreshes, as they call it in auto parlance. The last time you had seen a strong performance in the Maruti Suzuki stock was between 2014 and 2019, when they had launched quite a number of new models, and analysts now feel that probably we could see some kind of a repeat of that. The lack of launches was what was holding back Maruti. Of course, there were many other problems as well. Now, many factors seem to be coming together for the first time after a very long gap. According to Bank of America Merrill, it's positive on the stock. It has upgraded the stock. The biggest positive at this point is cooling commodity prices. That, coupled with fresh launches, probably, and you could have the stock in a new territory once again.
Well, Santo, fundamentals aside, I think probably the biggest driving factor for the stock at this point of time is the depreciation in the yen. I mean, at this point of time, there are some estimates that Maruti's PAT could be benefited by as much as 1,500 crores this year if the yen sustains at the current level that it is against the US dollar. So that clearly is a big benefit for Maruti. But you talked about launches. I mentioned to you, not so long ago, that I am a little skeptical whether Maruti Suzuki would be able to make the same sort of comeback that maybe it made in 2014, 2015, when it came out with a slew of launches, and they were mega success, right? I mean, you talk about Swift, you talk about others, all of those products were quite successful. But this time around, it's trying to get into a space where traditionally it's not been a very strong player, and that is the SUV space. Now, we know that a lot of the optimism is for the new SUV launches. I mean, market doesn't really care that much about the other products where it is trying to upgrade, but it's the SUV segment that the market really cares about, because that is where Maruti has lost a lot of market share two players like Tata Motors and some others. And if you look at what JP Morgan had to say, they believe, they share my skepticism. They believe that a new product launches is unlikely to lead to a lot of meaningful market share gains. I mean, Maruti has lost almost 600 to 700 basis points of market share in the past 3 to 4 years. So it will be very difficult. It could recover a bit of it, but I really doubt that it could go back to the heydays of 51% market share that it used to enjoy at one point of time. And apart from that, generally there is also now higher competition in the automobile space. Clearly what Tata Motors is doing is really taken everybody by surprise, and the way their models are successful, and some other players out there as well. I think it will be a little more difficult for Maruti Suzuki to go ahead and win back that market share, probably as easy it was maybe 10 years or 15 years ago. So I would still be a little skeptical. Yes, for me, probably it is a good tactical bet to get into, but from a longer term perspective, I would want to see more execution, more evidence to go ahead.
See, the concerns about market share, that is what caused the price to fall to as low as 6,500 a couple of months back, right? And now there is consensus that, the things are definitely looking around, and including currency depreciation is also one of the factors that could give a temporary lift to the bottom line, but that still is not going to be the major driver. The major driver clearly will come from the launches. And okay, the company may not have made a mark in the SUV segment in the past, but that's not saying that why it shouldn't be able to do that this time around.
Certain companies are not able to crack certain games, Santo. It's just the way of the land. Who could have thought that Nokia would be out of the cell phone game, or who could have thought that Motorola will never be able to play the cell phone game? But certain things are not just meant for you. I mean, Maruti is a great entry-level player.
Yeah, but right now, just look at the stock price and look at the comeback that it has made over the last few weeks. So you can't dispute that, really.
So
the market
but
seems to
if
be
the
having
yen
a very
turns,
different view.
I would be interested to see if the yen turns, what happens to Maruti's stock. I mean, I think that will provide us a clear picture whether this is driven by fundamentals or it is just technicalities that are driving the stock price. Well, one stock where fundamentals are starting to look quite good is SBI Cards, the State Bank of India subsidiary. The stock rose today on the back of very strong May credit card spend data, where absolute credit card spends have hit a record high actually, and risen more than 100% on a year-on-year basis and about 8% on a month-on-month basis. If you look at SBI Cards itself, its own or the credit spends on its own credit cards have actually risen about 8% on a month-on-month basis. Clearly a lot of strength. And according to analysts at Morgan Stanley, they believe that if you look at the provisional data, that RBI provides, that is indicating that probably in June as well, a lot of users of SBI's cards were spending quite heftily out there. So clearly, credit card side of the business is looking quite good. Clearly, it is starting to add new users, and it has probably recovered from the trough of the pandemic that it had been suffering from.
Quite a strong comeback by the stock over the last.
Yeah, it is. It's been a spectacular rise.
It's been, but also you need to know that the stock price had almost halved, from its peak. It fallen to about 675. There's too much pessimism, and now I think maybe the market is correcting.
Yeah.
That's one of the reasons you're seeing a sharp rebound in the stock price. But I see two major concerns for SBI Cards. One is that it's a monoline business, and you're still awaiting clarity on the merchant debit rate by merchant discount rate by the RBI. Now, if the ruling is adverse, it's SBI Card stands to get hurt more than some of the other players which have other lines of business as well. So that is one concern. And the second concern is about the growing trend of buy now, pay later, which almost is as good as a credit card.
Well, Santo, I don't know about BNPL. I mean, yes, it is a threat to the credit card industry, but overall BNPL, transaction probably would be of a much smaller level than probably at the credit card level. And I think probably the prevalence of credit card at this point of time is higher than BNPL in my opinion, because BNPL will largely be limited to a certain category of products than probably a whole hog of gamut of discretionary items that you can spend on through credit cards.
So, CJ, what I feel is that the rebound that you're seeing in the stock price largely has to do with the fact that the pessimism was overdone.
Yeah, I mean the asset quality issue that was there, that probably SBI will see a lot of bad loans going ahead, because I mean credit card, you have to say a lot of the credit card users don't generally have great CIBIL scores and stuff like that. So clearly that was a concern. But because the pandemic has not had that much of a scarring on that side of the business, clearly I think that itself, that is helping mend the stock performance. But yeah, as you said, growth going ahead would remain a concern, given that although signs so far is, at least in April and May, is that this year could see a rebound. But going ahead with talk of economic slowdown and whatnot, and with inflation as well, and and interest rates also rising, we'll have to see whether this momentum continues or not.
Well, we'll see that very shortly. Oil India, the next stock on our watch list. Now, CJ, overall commodity prices have been coming off.
Yeah.
You've seen some steep declines in the prices of nickel, aluminium, zinc. But in the case of oil, while prices have come off its peak, there's still no clear consensus on whether, prices will continue to slide, or this is just a brief respite, because still you have the problems in Ukraine.
Yeah.
Crude oil prices are likely to...
It's very difficult to call the oil price market.
And you saw a lot of volatility in Oil India stock. It suddenly zoomed all the way to 300 and then came crashing quickly. Yeah. There's been persistent talks about the government coming up with a windfall tax, on which even the company has said that they have not heard anything from the government so far. Apart from this, Numaligarh refinery, the major expansion work that's being undertaken, that's expected to go on stream by FY25. That would result in almost a 33% increase in its refining capacity. So that is something which is a key trigger to look forward to. And according to the analysts tracking the stock, even at current levels, according to CLSA specifically, has said that at current levels it's still factoring in a $45 crude oil price. Wow. Which is like,
that's surprising.
It is really low.
That's surprising, because other analysts were indicating that, some of the recent upgrades that have come in, they were probably indicating baking in about oil of about $95 to $105 per barrel. So clearly CLS's opinion really stands out there. But as you mentioned, Santo, I think that windfall gain tax, I think that remains a key overhang for the stock, and that is probably why one of the reasons why we are not seen a runaway rise in the stock. If you look at where it was maybe a few weeks ago, now the year-to-date returns have trimmed to only 20%, in fact less than 20%. So clearly there is selling pressure on the stock and there is overhang. Apart from that, I think, given the fact that Oil India had been such an underperformer for so long in the market, and if you remember, investors who had bought the stock in the previous cycles, say back in 2013, 14 or 2018, they have still not broken even yet, right? If you bought the stock at the highs of 2013, 2014, maybe 2018, you have still not made money on your investment, even despite the sort of upswing that we have seen in the stock over the past few months. So clearly,
I can see that, CJ, you're now using one of my own
arguments. No, so clearly, Santo, I feel that
you're learning, I must say.
Yeah, you have to say, you have to say what is in front of your eyes, and clearly it seems like a lot of people are utilizing every rise as a profit booking opportunity. And I feel that until unless that selling exhausts,
right,
the stock will probably not be able to see that up move. But now then the flip side to the argument is that by the time that selling exhausts, if the fundamentals do change, if we start seeing oil go below 105, maybe $100 per barrel, then suddenly the fundamentals also are not in your favor, and then probably you have exhausted your one big shot at a big time rally in just a couple of months. So that would be my concern. The next stock on my radar is IRCTC, clearly one of those underperforming stocks over the past 6 months, but on a year-on-year basis, still a good performing stock with 47% gains in the market. Probably no other stock has that much returns over the past 1 year, if you look at the large cap space in particular. Now, the past 1 week, the stock has started making some recovery. It has risen 6%, Santo, on the back of some bit of optimism again coming back for the earnings. We know that the June quarter was expected to be a good quarter for the company with rising travel demand. You have, ticket bookings have been quite high for the company. So clearly, the Q1 earnings would be quite strong for the company. And overall, you have been mentioning this, that there are a lot of short positions. So I feel from a tactical point of view as well, there could be some short covering going ahead, especially with the expiry coming up, the monthly, June derivative expiry coming up on Thursday. And in the SLB segment, you have the expiry coming up on the 7th of July, which is, when all trades have to be squared off. So clearly, those who have got, the bears who have gone short on the stock would likely have to take some profit and would have to cover the stock. cover their short position, and that could lead to a good rally for the next 2 to 3 weeks in my point of view.
The same SLV segment, argument, I would say that CJ, in the case of IRCTC, that position has been the outstanding of about close to 2 million shares. In fact, the outstanding short positions have been steadily rising over the past few months, and it still now stands about 2.2 million shares, which is quite.
Which adds to my point that there could be an even bigger short squeeze on the stock.
But when you look at it, the technical indicators are all showing very bearish signs according to Moneycontrol Pro. That is one part of it. But secondly, even when you look at the chart, the stock has been struggling to sustain above 600. Even if you see the pullback rally, it's not been as effective as you've seen it in the case of some of the other mid caps. So I think there is still a lot of negative sentiment for the stock, at least the price.
Which is surprising to me. I don't really understand why there is so much of negative. Is it because of the internet tag probably that IRCTC has, that
I would say
a lot of the rise was also associated with the fact that IRCTC is a platform stock just like IEX or maybe Paytm and all, so therefore we are buying it. But then now that narrative has gone away, the stock is unnecessarily getting beaten down.
Yeah, I think this policy flip-flop there has also contributed to the negative sentiment around that, and a lot of retail investors had a really bad experience in October last year. And also, if you see during that particular quarter, October to December is when you had maximum number of institutional investors trimming their holdings to the stock. So I think all these factors are now coming back to bite. That's how I
think Santo, but still, I think on a fundamental basis, still makes a good case for me from a tactical and even at least from a 12-month point of view. It makes a good case for me. If I look at the stock personally, it looks like 1 year rolling returns are about 47%. So clearly, it has not lost me too much money. It has still not lost me my capital. So at least on that front, the stock still remains quite sturdy compared to other competitors.
Well, the contrary indicator that I follow is that when nobody is talking well about that stock, probably that is the time one should be looking. Aditya Birla AMC. Now, this again, CJ, do you notice one thing? When the market was moving,
AMCs, man, what is up with you guys?
I mean, you need to look for value, right? You can't chase the story which everyone is anyway talking about.
AMC is the place you find it. Come on, Santo.
Why not? You need to get into a story
when Angel One, I could understand still.
You need to get into a story when nobody is talking about it, and I think with the AMCs that's been the case. See, the sector as a whole is expected to do well. Maybe the incremental flows could really abate a bit in the short term. But there's no denying that over the longer term, clearly mutual funds will be the most preferred route for retail investors looking for an exposure to the equity market. That said, all AMC stocks have taken a beating over the last 6 to 8 months. They have not really performed, or rather they have underperformed.
They have not performed at all.
Yes, and now I think that seems to be changing. At least analysts are beginning to take a fresh look at the sector. You had CLSA coming out with a positive rating.
There have been a lot of upgrades.
Kotak institutional equities coming out with a positive rating, and now you have Citi coming out with a positive rating on Aditya Birla AMC. Besides the brand name, what Citi's main argument is that it's got a very strong market share in the fixed income segment, about 10.5%. That's vital because this is probably also a time when you could see a lot of money moving into fixed income, into debt schemes. Although debt schemes are not as lucrative as the equity.
I mean, when equities are probably giving you negative returns, then debt schemes look
definitely,
don't they?
But at the same time, there's plenty of room for improvement also, according to Citi, on the performance of the equity schemes. Already some of them are showing signs of turnaround, and also at 20 times 1 year forward earnings, this is Aditya Birla AMC is clearly one of the cheapest stock in the AMC space. So all these factors put together has led to Citi taking a positive view on the stock.
I think, Santo, one of the reasons why AMC stocks are struggling, and I think this is one of the reasons why Aditya Birla AMC is also struggling, is that market is not confident about profitability, right? You can get inflows as much as you want. I mean, if you are getting 10,000, maybe your rival is getting 20,000 crores. That is not an issue. Inflows have not been an issue. I think the issue is that this market, at least investors here, love companies which are monopolistic in nature or are gaining market share and at the same time increasing their margin or showing pricing power. Mutual fund industry is one of those industries where competition is probably at its highest that it has been in the recent past, with the entry of now 4 or 5 new players on the anvil. Clearly, that competitive pressure is not going to ease, and therefore market share is going to remain under pressure for at least, especially for the top 10 mutual funds out there who have garnered a lot of market share over the years because of consolidation and other industry factors. Apart from that, the rising share of passive products. I mean, I keep on repeating this point when it comes to AMC, but as more and more AMCs get into the passive game because of investors actually being more, attracted towards such products, the margins that they earn could possibly end up suffering in the longer term, because we know that passive products earn you less on the margin side than actively managed products. Yes, there could be a volume game there. That is true, but overall it just seems like that the market is just not convinced that this is one sector where if you are a good player you could still go out and make more margins and get more market share. I think until and unless markets start seeing signs of consolidation in the industry, I think this sector in general will remain quite unattractive for the market.
Well, with that, let's take a quick look at the
yes
indices.
I hope we are still towards the day's high.
Yes, not exactly at the day's high, but not far from there either. Sensex up about 440 points at 53,000.
Yeah, I think we have seen a bit more profit booking. The Nifty and Sensex are down, up about 0.8%. So clearly, when we started off, we were around 1.2, 1.1%. So there has been a little bit more profit booking, Santo, as we head towards the close of the session. But the small cap and the mid cap space are doing quite well, Santo. The small cap index is higher by 2% at this moment, while the mid cap index is higher by 1%. So clearly, it's the broader market who are stealing the show today. And maybe, I think they're driven by retail investors, Santo. Clearly, well, they have come back all guns blazing again in the market. Well, in the next segment, Santo,
is there anything we have missed?
I don't think we have missed, but I think there is something about that big news that probably investors might have missed, and that is the much-awaited buyback of Bajaj Auto. The company today has announced that they are going to buy back shares worth up to 2,500 crore rupees with a maximum price of up to 4,600 rupees per share. Well, that is about a 20% premium to the stock's previous closing or Friday's closing price, if you look at it. Now, the crucial point, I think, which was in the details, was the fact that this buyback, Santo, is going to happen through the open market method instead of the tender method. Can you tell me, what would be the difference between those two?
Well, in the in the tender offer, very clearly there is a set price, of course, and they tender it to the company, and it's easy to calculate roughly.
How much you
what
can
is the acceptance, and you know that, let's say, if the open offer price is at a significant premium to the market price, it's very likely that most investors will want to participate in that.
Yeah.
Unlike in the case of market purchases, right? You never know at what price the company may indicate a maximum price up to which, but there is no, of course, every day
you can't tell when the company is buying, right, in the market. You will never be able to
and the company may prefer to buy it at a lower price. It will not necessarily want to buy always at the higher price. The company does make disclosures about the number of shares that it is buying through this. But things have far improved, from the time back, at least a couple of decades back. A lot of companies in bear markets would come and announce open offer merely to provide some kind of a floor. Of course, disclosure norms are far more tighter now, but you've also seen the trend now shift more towards, the tender offer process.
Exactly. So that because of the investor backlash. Generally, if you come out with an open market, if you're trying to get a share buyback done through the open market, you will get a thumbs down instantly from the market, because the market just doesn't like it, because it likes a little bit of certainty that at least some bit of some part of shares that I'm being tendered are going to be accepted, instead of being in the dark as if when the promoter is out there or the company is out there, I beg your pardon, to buy the stocks. Now, clearly, apart from that, of course, now this is happening at a time when curiously, Bajaj Auto stock had actually been doing well. Over the past 5-4 months, it has been an outperformer in the market, given the general shift towards auto sector that we have seen. But the past 3 or 4 years' performance has not been that great. Clearly, company had a lot of cash on its books, and it has decided that it wants to probably give back some of it to the investors, probably in the belief that maybe the market is not valuing the company the way they think where the value lies, and I think the price that they have set is clearly an indication that 4,600 is where they feel the price of the stock should be, which Santo could also act as a ceiling, right? In the near term, it could also act as a ceiling for the stock.
Depends again. on the sentiment for the stock. Now they know that the company may not want to buy it beyond that the price at the upper limit that it has specified. But if the market feels the shares are still worth more than that, there's always a chance
I mean,
that prices
something will have to change drastically in the fundamentals of the company for that to happen.
Yeah, because right now market is still not that upbeat about. Of course, the outlook has improved from what it was a few months back, but still. Auto is not right now the hottest sector as far as the market is concerned.
That was Bajaj Auto. We will wait and see how investors react finally to the tender offer or to the buyback offer, I beg your pardon, as and when it's open. On the horizon, well, Santo, two things that I'll be looking out for. There's the US durable goods data that will come out for May. It'll be interesting to see how that segment of the economy is doing, because it's an indicator of consumer demand, and we know the situation with inflation in the US and interest rates hike. We'll have to see how the consumer sentiment is there. And apart from that, the all important ECB forum of central banking will start tomorrow. All the central bankers will be gathering there, so there'll be a lot of debate, a lot of news flow coming out on inflation, on interest rate hikes, on cryptocurrencies, CBDCs. So you will have a lot of news flow coming in there. So that will clearly keep the market's attention from tomorrow onwards. So those will be the two things that I'll be looking out for.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We will see you again live at 9 a.m. tomorrow.